the altcoin awakening, and why HBAR and XLM are leading it. Forget what you think you know about the crypto market. The old narrative is dying, and it's dying fast. While everyone's eyes are glued to Bitcoin ETFs and Ethereum's Layer 2 drama, something way bigger is happening just beneath the surface. A silent takeover is in motion. It's quiet, it's calculated, and it's not being driven by hype cycles or influencers. It's being driven by utility, enterprise demand, and serious capital. And at the very center of this quiet revolution, two names that have been underestimated for far too long: HBAR and XLM. These aren't just altcoins. They're not chasing the meme crowd. They're infrastructure-level plays that have been slowly, methodically building real-world integrations while the rest of the market chased casino tokens. Now they're finally starting to wake up, and in just the past few weeks, they've outperformed nearly every other midcap in the game. But here's what's different this time. They didn't pump off hype. They didn't trend on Twitter because of some celebrity endorsement. They're moving because of real triggers, fundamental shifts that the smart money simply can't ignore anymore. Let's break this down. Hedera HBAR just secured a major listing on Robinhood, a platform with over 23 million users and instant access to mainstream capital. Within hours, it became the #1 gainer among the top 20 cryptocurrencies, leaving even Ethereum and Solana in the dust. That wasn't random. That was precision timing. And it lit a fuse. Meanwhile, Stellar XLM dropped Protocol 23, a high-efficiency upgrade that enhances scalability and improves smart contract performance across the board. This isn't some cosmetic update. This is the foundation of enterprise-grade finance, finally coming to life on-chain. The result? Institutional wallets quietly bought up over 400 million XLM tokens in just a few weeks, without a whisper on mainstream headlines. This is the part where the crowd starts waking up. Too late. And while everyone's still playing musical chairs with dog coins and forks of forks, HBAR and XLM are quietly absorbing hundreds of millions in capital. Not from retail gamblers, from institutions, from family offices, from algorithmic desks that don't care about hype, they care about ROI. We're witnessing the early stages of a structural rotation in crypto, one where value is migrating from noise to networks that actually do something, from speculation to settlement, from trading apps to infrastructure rails. And guess what? HBAR and XLM are already in position. We're talking global payments, tokenized securities, CBDC frameworks, and carbon market integration all live or in pilot phase. This isn't just another cycle. This is an ecosystem awakening. And if you're holding HBAR or XLM right now, you're not hoping. You're holding assets that are finally catching up to the value they've been quietly building for years. But here's the twist. Most of the market still has no idea what's coming. They're not looking at the flows. They're not watching the unlocks. They're not tracking the council votes, validator expansion, or enterprise partnerships. And by the time they figure it out, the easy gains will be gone. This is the window. Right now. You're not early. You're on time, which in crypto is just as powerful. So pause this video right now and smash that subscribe button, because what we're about to cover next will separate the noise from the next layer of wealth-building infrastructure. HBAR and XLM aren't speculative plays anymore. They're strategic. And from here on out, things escalate fast. Let's get real, because this isn't some random altcoin pump. This is a strategic ignition, and HBAR just flipped the switch. Everyone saw the Robinhood listing on July 25th and thought, oh, that's cute. A little retail bump. But that move wasn't the event, it was the catalyst. The spark. The truth is, the real fuel was already stacked up. Months of silent accumulation, quiet infrastructure upgrades, and institutional desk flows building pressure under the surface. Robinhood just lit the match. And the result? HBAR skyrocketed to the top of the charts, instantly becoming the #1 daily gainer among the top 20 cryptos. But this wasn't your average hype rally. It wasn't driven by Twitter influencers or Discord alpha groups. It was driven by capital structure shifts, and the on-chain proof is undeniable. Open interest in HBAR futures surged past $450 million. That's the highest level since January 2025, signaling a wave of new players stepping in. Not retail noise, but serious desks, hedge funds, market makers, and quantitative traders who don't play for fun. They play for ROI. This isn't your cousin buying with moon emojis. This is deep liquidity entering the chat. And the technicals? Picture perfect. HBAR broke out of a double bottom structure, reclaimed the critical 23 cents level, and pushed straight into its long-standing resistance zone between 30 cents and 35 cents. That's where price action has historically stalled. Until now. The next move? If momentum continues and volume holds, we're looking at a clean break toward $0.50 plus, with macro targets sitting near 65 cents, and that's just the technical roadmap. But here's where things get even more interesting, and most people are still completely blind to it. The enterprise narrative. Why this time it's real. Behind the scenes, HBAR isn't just becoming a popular coin. It's becoming a core component of enterprise infrastructure. The Hedera Council, go look at the names. Google, IBM, Boeing, Deutsche Telekom, Dell, Standard Bank. These aren't just logos on a slide deck. These are governing partners actively building on and contributing to the network. HBAR is one of the few protocols where governance isn't a meme. It's legally binding, decentralized, but accountable. That's why banks and government projects are choosing Hedera when they need compliance, speed, and security. Case in point, the RBA Acacia pilot in Australia, a live central bank digital currency initiative, is already leveraging Hedera's tech for tokenized asset issuance and smart contract-based settlements. This is CBDC infrastructure in the real world, not a theoretical roadmap. And that's just one example. From carbon credit markets to fractional real estate, HBAR is showing up again and again as the chain of choice for tokenizing real-world assets. Why? Because it works. Finality in seconds. 10,000 plus TPS. Energy-efficient consensus model. Fixed transaction costs. Regulatory-grade architecture. In a world moving toward on-chain finance, HBAR is the quiet giant nobody saw coming. The AI factor, and what Grok just predicted. Now, let's talk next-level analysis. The Grok AI model, trained on massive price datasets, technical indicators, and market behavior, recently published a new forecast for HBAR. Its prediction? If momentum continues at the current velocity, HBAR could hit 45 to 65 cents by late August. Let that sink in. That's not hopium. That's database projection based on live inputs. And historically, AI models like this, especially when paired with strong fundamentals, tend to underestimate, not overpromise. And if this turns into a full-blown alt-season breakout, top analysts are already mapping macro targets between $1.26 and $3.30 for the next 12 to 18 months. Now, that may sound outrageous until you remember that in the 2021 cycle, coins with half the utility and none of the partnerships did 10x plus off lower bases. BAR's just now hitting the radar of US platforms like Robinhood. It's just now breaking out of long-term technical resistance. It's just now getting the volume and volatility profile that momentum traders look for. In other words, it hasn't even started. The 2017 and 2021 parallel. History's warning. Go back and study every major bull run. In 2017, we saw coins like XRP go from $0.006 to $3.84. Not because of a tweet, but because liquidity chased real use cases. In 2021, Solana, ADA, and even meme tokens exploded, often fueled by narratives, not fundamentals. But in 2025, the market has matured. Regulators are watching. Institutional desks need real rails. And that means the next wave of capital will reward utility, governance, and enterprise-grade design. HBAR fits that description perfectly. So when you see it break through these key levels, know this: it's not just technical. It's not just sentiment. It's everything converging at once. And if you're already holding HBAR, you're early to a moment that most won't recognize until the headlines scream, HBAR hits $1 plus, what you missed. But by then, it'll be too late. Let me put it straight. While the market is chasing hype coins and short-term pumps, Stellar XLM is moving like a chess grandmaster 3 steps ahead, quietly positioning for dominance in a game few even realize is being played. Protocol 23. The catalyst everyone slept on. It all started with Protocol 23. And no, it wasn't just a network upgrade. This was the unlock event for Stellar's next evolution. Faster finality, improved throughput, massively enhanced support for smart contract execution via Soroban, regulatory-friendly performance upgrades that make XLM a real contender for financial-grade tokenization. But here's the genius part. They didn't hype it. No fireworks, no influencers, just results. Quietly, Stellar became one of the most compliant, scalable, and real-world integrated chains on the planet. And that matters when you're trying to become the infrastructure for regulated global finance. Institutional accumulation is already happening. We're seeing real accumulation now. And not just whales flipping short-term bags. Wallet analysis from July showed over 400 million XLM accumulated by institutional and long-term holder wallets. These are not meme traders. These are wallets tied to OTC desks, enterprise nodes, and likely fintech-backed custodians. Why? Because they know what's coming. The MoneyGram global ramp integration is live and expanding, giving Stellar real reach into 180-plus countries with fiat to crypto and crypto to fiat capabilities. African mobile corridors, particularly in Nigeria, Ghana, Kenya, and South Africa, are actively piloting Stellar rails for remittances, microfinance, and FX swaps. The UNHCR continues to use Stellar-based aid disbursement, which is quietly onboarding the next generation of wallets and recipients. This isn't speculative. This is real economic utility right now, and it's compounding. Price action with real-world backing. Let's break down the chart. After a 100% move in early July, XLM has been coiling up, clean consolidation in the 43 to 45 cents range. The resistance at 46 cents is a psychological and technical pivot. Why? It served as a rejection point during 3 previous cycles. If XLM breaks that level with volume confirmation, we're not just talking about a move to 52 cents, we're potentially entering price discovery for the next macro wave. And the indicators? RSI is showing bullish divergence on the 4H and daily. MACD is about to flip, and a symmetrical triangle spotted by legendary trader Peter Brandt is tightening. His words were clear. If this breaks up, it targets $1.51. Not a meme, not a wish, a real setup. And let's be real, when Peter Brandt calls a target, the smart money listens. Soroban, the compliance-first Ethereum alternative. This part is criminally underreported. Soroban isn't trying to be an Ethereum killer. It's what Ethereum was supposed to be for institutions. Smart contracts with performance, safety, and regulatory compliance baked in. No gas fee volatility. Built-in metering. WASM-based virtual machine that allows real applications at scale. Already, Palago Labs is running a real-world DeFi platform for global trade finance on Soroban, serving SMEs, freight forwarders, and financial institutions across Asia and Europe. This is what real blockchain for business looks like. The implication: Stellar is no longer just a cross-border remittance token. It's becoming the default smart contract rail for compliant, tokenized finance. The old coin misconception is about to backfire. People love to joke about XLM being old. But guess what? So is gold. So is Swift. So is Visa. And yet, when you're the backbone of real systems, you don't need hype. Stellar has spent the last 2 years building in silence. Direct government ties with the IMF, Ukraine's CBDC pilot, and other central banks. Enterprise relationships with IBM, Tala, Flutterwave, and more. SDF's $100 million Soroban Adoption Fund is just now being deployed at scale. What you're seeing now is the early tremor before a magnitude 9 institutional shakeup. If you're holding XLM and wondering if it's still worth it, you need to understand what's brewing beneath the surface. XLM is now a token sitting at the intersection of regulatory adoption, smart contract scalability, institutional-grade asset tokenization, and real-time fiat ramps. And as the financial world shifts toward programmable money, tokenized FX, and smart remittance solutions, guess who's already positioned? XLM. Not just surviving, quietly dominating. what the smart money is seeing, and why timing is everything. So here's the question. Why now? Why is all of this Robinhood listings, Protocol 23 upgrades, huge buys, AI forecasts converging now? Because we're entering a new phase of the market where utility-based altcoins with real adoption are finally catching up. Bitcoin dominance is stalling. Ethereum layer 2 congestion and gas fees are pushing institutions to look for faster, leaner solutions. And the macro backdrop? Interest rates peaking, inflation cooling, capital unlocking. Liquidity is looking for the next narrative, and HBAR and XLM check every box. Look around. Tokenization of everything is the new Wall Street obsession. Central banks are testing CBDCs. Every asset manager is talking about real-world assets on-chain. You think the big players are betting on meme coins and hype tokens? No, they're betting on rails, on infrastructure, on chains that already work. That's Hedera. That's Stellar. And if you hold either of them, you're not early, you're on time. And timing is everything in crypto. The window is open, but not for long. Let's not sugarcoat this. You're holding HBAR or XLM. That's not luck. That's positioning. But positioning is only half the game. The other half is execution. So ask yourself, do you have a plan for when HBAR hits 35 cents? Or 50 cents? Are you ready to scale if XLM breaks 46 cents and rockets to 60 cents or higher? Do you know where your exit or re-entry zones are? Because here's what happens every cycle. Altcoins explode. Most people hesitate. They freeze at resistance. They sell too early. Or worse, they wait until it's too late. But this time is different. You have the data, the roadmap, the signs, the flows. Institutions are already moving in. AI models are front-running human emotion, and use cases are accelerating faster than anyone expected. So the window is open, but it won't stay open forever. If you hold HBAR or XLM, you better see this, and you better act with intention. Don't just hold. Understand what you hold. Hit that subscribe button so you stay 5 steps ahead, not 5 months late. Because here at Be Crypto Smart, we don't chase hype. We front-run fundamentals.